Hey, what if I told you that a military strike thousands of miles away could spike your grocery bill, drive up fuel costs, and even collapse small economies? Sounds extreme, right? But that's exactly what's starting to happen as the Israel-Iran conflict unfolds. Welcome back to the Economic Scope. I'm Sarah, and today we're breaking down how this escalating tension is affecting global markets, financial stability, and, most importantly, developing nations. If you find this information valuable, hit the subscribe button. Let's dive in. So, here's the latest. We're now in day 4 of heightened tension between Israel and Iran. While the immediate fear of full-scale war seems to have cooled slightly, thanks to some behind-the-scenes diplomatic messaging, the economic aftershocks are just beginning. U.S. markets have actually rebounded in the last 24 hours. The Dow is up about 0.8%, the S&P 500 gained nearly 1%, and the Nasdaq surged over 1.3%, fueled by strong performances from Nvidia and Tesla. But don't let that fool you. These gains are fragile. Oil prices, which had spiked nearly 7% on Friday, have now pulled back slightly, sitting around the low 70s per barrel. That's still dangerously high if you're a fuel-importing country. Gold, often the go-to safe haven, also dipped slightly, a sign that markets are feeling slightly less panicked, for now. But let's not just focus on Wall Street. This is where I think the conversation gets real and personal. Developing nations are not built to absorb shocks like this. Think about it. Many of these countries import most of their oil, so every dollar increase in crude prices means higher transport costs, rising food prices, and weaker currencies. That's a triple whammy, especially if you're living paycheck to paycheck. If oil jumps from $72 to $85 or $90, we're talking inflation spikes, central banks forced to raise interest rates, and governments slashing social programs just to manage debt. You're not just hurting the economy, you're putting real lives at risk. And no one's bailing these countries out right now. The IMF? Busy. China? Pulling back. The US? Focused on domestic politics. And what makes this more dangerous is the Strait of Hormuz. Around 20% of the world's oil passes through it. If this conflict escalates again, if there's even a rumor of blockage, that's a guaranteed oil shock. Let's swing back to the financial world for a minute. Yes, U.S. tech stocks are showing strength. Nvidia, AMD, Tesla, they're bouncing back. But volatility is lurking. Some analysts are warning that if the Israel-Iran conflict worsens, we could see a 10 to 20% drop in U.S. equities by the end of the year. Treasury yields are holding around 4.4 to 4.5%. Which tells us investors are still expecting inflation to hang around. And you know what that means? The Fed's not cutting rates anytime soon, no matter how bad the headlines get. For emerging markets, that's brutal. Higher U.S. rates mean capital outflows, currency depreciation, and debt distress. It's the domino effect, started by missiles, felt by mothers in Manila or Nairobi. And while we're analyzing charts and bond spreads, let's not forget, this is about people too. Iran has reportedly sent messages to the U.S. via multiple channels, saying they want no further escalation. Israel, on the other hand, has made it clear they're not tolerating Iran's nuclear ambitions. What worries me? Even if the fighting cools down, the tension isn't going away. There's a long game being played here, and every flare-up chips away at economic confidence, not just in the Middle East, but globally. My honest opinion, the world's acting like this is just another headline crisis. But if you look closer, this could be the spark that sets off real financial fragility, especially in the global south. Emerging economies were already battling post-COVID inflation, slow growth, and debt issues. Now, they've got geopolitical risk and oil volatility piled on top. The U.S. might weather this storm with strong companies and deep capital markets, but Nigeria, Pakistan, Ghana, they don't have that cushion. This isn't just a market story, it's a humanitarian one. If you learned something new today, hit that like button, subscribe, and tap the bell so you don't miss our weekly breakdowns of real-world finance through a global lens. Drop a comment. Which emerging market are you most worried about, or what impact are you already seeing in your country? I read every one, and I respond. Stay informed, stay sharp, and as always, keep watching the economic scope. See you in the next one.